Buying a car. Lease, buy new, or buy used. Buying a car is a large purchase that most of us will make at least once in our lifetime. It's an important decision because it impacts your bank account and your commuting options, so it helps to do the research before you commit to anything. Check out this article to see the advantages and disadvantages of the three main ways of acquiring a vehicle: buying new, buying used, and leasing. What is the difference between buying a car and leasing a car? There are a few key differences between buying and leasing a car. When you buy a car, you're responsible for all maintenance and repairs. You also have the option to sell or trade in your car at any time. When you lease a car, you're only responsible for covering normal wear and tear. You also can't make any modifications to the car without permission from the leasing company. Finally, at the end of a lease, you have to return the car to the dealership. What are the different types of car payments? There are a few different types of car payments that you may encounter when buying a car. The three most common are leasing, buying new, and buying used. Leasing. When you lease a car, you are basically renting it from the dealership for a set period of time. You will make monthly payments, and at the end of the lease term, you will have the option to buy the car or return it to the dealership. There are some benefits to leasing a car, such as lower monthly payments and the ability to drive a newer model car. However, there are also some drawbacks, such as mileage restrictions and the fact that you will never own the car outright. Buying new. When you buy a new car, you are responsible for the entire purchase price. You will make monthly payments on the loan until it is paid off, and then the car will be yours. Buying new has its advantages, such as getting to choose exactly what features and options you want in your car. However, new cars also tend to depreciate quickly, so you may not get as much money back when you eventually sell it. Buying used. Buying a used car is often cheaper than buying a new one. You will be responsible for the cost of insuring and maintaining your car, but you won't have any monthly payments. You don't get to choose exactly what features or options come with your car, but you may get a better deal than you would if you bought new. For example, if you are buying a used car that is several years old, chances are its value has decreased enough that it will not depreciate as much when you sell it. The main drawback of buying used is that you don't know how long the vehicle will last before having to buy another one. However, many states require that all used cars go through a safety inspection before getting licensed and registered in their state. What is accelerated depreciation? If you're looking to save money on your next car purchase, you may have heard of something called accelerated depreciation. But what is it? And how can it help you save money? Accelerated depreciation is a method of depreciation in which the value of an asset decreases at a higher rate than it would under normal depreciation. This means that you can write off a larger portion of the car's value each year, which can save you money on taxes. To take advantage of accelerated depreciation, you'll need to buy a new car. Used cars are not eligible for this tax benefit. If you're thinking of buying a new car, be sure to talk to your accountant or tax advisor about whether accelerated depreciation is right for you. It could save you thousands of dollars over the life of your loan. Pros and cons of leasing versus buying new, used. There are a lot of factors to consider when deciding whether to lease or buy a car. Leasing can be a great option if you don't have the cash to buy outright, or if you want to avoid the hassle of selling a car when you're done with it. But there are also some potential downsides to leasing that you should be aware of before making your decision. The biggest pro of leasing is that it can be much cheaper than buying a car outright. When you lease, you're only responsible for the depreciation on the vehicle during the term of your lease, which is usually 2 or 3 years. This can be a significant savings over the course of your lease, and it means that you can get a nicer car than you could afford to purchase outright. Another advantage of leasing is that it can be easier to get out of than an auto loan. If your financial situation changes and you can no longer afford your monthly payments, you can simply turn in the keys and walk away without being further obligated. With an auto loan, on the other hand, you would still be on the hook for the remaining balance of the loan even if you had to sell the car. However, there are disadvantages to leasing that should be carefully considered. The biggest drawback is the hidden costs of leasing, which are not readily apparent when you sign your lease. Many people lease because they assume that it will be cheaper, but these other expenses can quickly add up. For example, if you have a vehicle accident, the insurance on a leased vehicle may be more expensive than what you would pay for a loaner car through an auto insurance policy, so you may end up paying more if you lease. Also, some auto dealerships charge large fees for the privilege of driving off the lot in a new car. While most of these fees are negotiable, it's important to be aware of them before purchasing your new vehicle and signing the lease. Leasing can be a good option if you don't plan on keeping the vehicle for more than 30 months, but it should not be your first choice if you prefer to own your vehicle at the end of the lease. If you are considering leasing, make sure you fully understand all of the fees and costs that will impact your purchase decision. Thanks for watching. See you on the next episode.